World Financial Group offers entrepreneurs from all backgrounds the opportunity to start their own business on a level playing field. Dr. Jana Woodhouse, receiving the WCM Wall Street Pioneer Award by the United Black Wall Street of America, Inc., is one of those entrepreneurs.
I see WFG and TFA as a place where African Americans with an entrepreneurial mindset can flourish. And the bonus, we help families and serve the communities across the country.
To learn more about us, go to worldfinancialgroup.com.
We are the sons and daughters of the soul. We are resilient and forever forward-thinking. We ask for nothing else than the opportunity to live and to create the lives that we were meant to live. We want nothing but an equal chance at options and possibilities. The same possibilities and options to live out our potential as our fellow man. We want to be heard, understood, and expressive in our reality. We are the future. We are the creative. We are here.
She was told that she couldn't play with the boys. She was told that they were too big, too rough, too strong. She was told to give up her dreams and move on. She was told to just be pretty, be quiet, be a lady. She was told that women had to stay on their side of the court, stay in your lane. Playing and competing with men was insane. She was told that men and women would never be equal. Dreaming like that would only be linked to your mind, to your soul. She never listened. She knew that their thinking was old. She was magic. She is the definition of spirit. She is what champions are made of. She is now.
Greetings and welcome to Access Wealth Nation for another day to get your checkup from the neck up and get your financial awareness in hand and started. Okay, so of course, you know, I'm Dr. Jana B. Woodhouse, and I'm giving you your opportunity to get that checkup from the neck up and to build on your financial literacy. See, it's not just enough to have someone invest money for you or do whatever. It's the key for you to understand how money works. Because once you know better, you're going to do better. So that being said, since I brought that up, I partnership with the How Money Works company and the Money Milestone company. And that is with the book. We have the How Money Works, Stop Being a Sucker book. And these books can be gotten on Amazon, of course, but instead, if you go to my website at JanaB at wealthwave.com, that's Jana, JANAB at wealthwave.com, wealthwave.com, you can request the book and we will send it to you. There's also How Money Works for the Next Generation. And on this is that this is really for folks 18 to 40. I didn't think I'd ever say that someone 40 was the next generation. But anyway, 40, it's act now or pay later. And then because of women receiving, as you all may know, you've heard me say it before, is that in the year 2030, it's coming around the bend. That's 4 more years. That women are going to be inheriting somewhere around about $30 trillion. That's trillion with a T. And if that's the case, we have How Money Works for Women. Take control or lose it. And again, it is so that you know better. If you receive money, I have seen so many people in my career have received money, inherited money, gone to unclaimed funds, hint, hint, and found money but then they don't circulate it, they spend it. Yeah, there's a difference between circulating and spending. We have a tendency to, once something is spent, guess what? It's gone. But when you're dealing with something that is circulating, it might circulate a little slower, but the bottom line is it's going to come back around. That's the mindset we have to be in. These years are passing so fast, and we have to honestly, as a people and a community, figure out how we're going to make our assets grow. So, again, we're on Access Wealth Nation on the Soul City Broadcasting Network and on WHCR 90.3 FM, the voice of Harlem. And Harlem is the cultural capital of the world, whether people want to admit it or not, we know it. And so, in doing so, we have to put ourselves in a position of understanding how money works. We talk about everything else, civil rights, um, things that are going awry in our community, violence. We need to really look at the opportunity for us to get our assets together and make it grow, make them grow. And I don't mean just for a little moment, for legacy building. I have a partner on the Soul City Network, Tyrone Glover, and he talks consistency about the legacy that we need to build. And we do need to do that, but we need to know what to do with it so that we can teach the next generation and the next generation and so forth. And I have had the honor, come this Saturday, I'm going to be speaking to Omega Psi Phi, the historical Black College tour. They do it every year. I believe this is like their 40th year that they're doing it anyway. The key is that these are young scholars that are getting ready to go to college, and they're being exposed to the historical Black colleges, which I think is phenomenal. And that being said, we've got lots of projects that we want to put together to get our generation to generation understanding how money works. What do we study when we get into school? Because that's another thing. There's some levels here. We have a tendency, we want to be social workers. That's really nice. You'll never become rich being a social worker. I'm telling you that. Yeah, I know someone's going to come back and write me on that. But owning your own therapy group is a different thought. Having the idea of entrepreneurship, it is so important that we understand that we need to keep the dollar circulating in our community as opposed to it disappearing. And so, that being said, I'm on a mission to bring financial literacy into our community and make it sustain. Because some people say, well, I know how money works. And then after that, you ask them about, can you describe what compound interest is and the rule of 72? And they say, deer in headlight. I'm not trying to shame anyone. I'm trying to make sure that everyone is at least on the first level when it comes down to financial literacy. So, also in each one of the books, we have with the Wealth Wave group, we have the ability to give you a free financial analysis. You know what they say is if you have a plan, then you're not planning to fail. But if you have no plan, you're pretty much planning to fail. So, without any extra offerings or obligations, you have the rights to have a free financial analysis. And we can provide it for you at 646-375-2121. And we have associates who are trained just to do that. We don't sell your information, we don't take it anywhere. But if you have a plan, then you can see, I plan on, I want to retire in 2 or 3 years. I want to retire in 20 years, or I have a child and I want to make sure they have the proper education. And so I would like to be able to fund that. What's the best way? This is when you need to take the geniuses of the financial educators out here and use them. Now, of course, those of you, as we open the show up, please, if you have any questions, comments, please share them. we will answer. If I have the answer, which most of the time I do, if I have an answer, I can provide it for you. If I don't, I know how to say, I'm going to find out, and guarantee dollar to a donut, I'm going to find out for you. So please feel free to put your information, question into the chat. This is some of the things that we have to do. Now, there's also something buzzing around called the financial literacy quiz. And that's kind of really very powerful because it's 25 questions, I believe 25 questions, and you can find out how you stand on your knowledge of financial literacy. Guess what? Nobody will know what your answers are or your score is. But if you so, I'm getting ready because I think it's necessary. Getting ready to start the financial literacy classes again, the elements. I think it's very necessary for you to be able to sit in on a class, not worry about what people think about you, and get the information and then take it to the next level. Yes, there's the How Money Works forwards.com. It's supposed to be .com/Jana B. You can take the quiz and get an idea of where you stand. If you know where you stand, then you have the opportunity to progress. And that's what all this is all about. I have had through the years the opportunity to learn a lot regarding finance. In those years on Wall Street, being a Wall Street pioneer, which was a great honor that the uh, mayors of the coalition gave me that honor. More just so proud to have. But the key is, what good is it if I know and I don't share it? And if I put a price on everything, doesn't need that, do that. We need to help each other get to the levels of where we can take our money and not just double it, quadruple it, you know, double that again. These are the things we need to concentrate on. So, quiet as it's kept, Monday starts the tax season, our income tax season. IRS will start the processing on the 26th of January. At least we're expecting that to happen. Now, let me talk to y'all straight. If you don't have all your documents together, please do not send them to your accountant or your tax preparer. Make sure you have all your documents. I'm going to start to put together for my clients a little checklist because the tax laws have changed. We're in this situation of, oh, there we go. For the financial literacy quizzes, take the flq.com/Jana B, JANAB. That just leads you to that site and that you could ask those questions. Take the flq.com/Jana B. Just to see where you're at, get your score, and then see what you're going to do. So, probably for Black History Month, starting in February, I will start to show the classes, and they will rotate. I will have 5 financial element classes and one's on some type of topic that you would like to know about. So I'm asking y'all to send in to Anaj Enterprises Inc.com. No, Anaj Enterprises Inc. at gmail.com. I'm sorry. There it is. It's listed. And tell me some of the things that you would like to hear about. Last week we did retirement because someone wrote in and said they wanted to know about the retirement accounts. I'm listening. I'm hearing. So you just got to relate. There's no obligation behind this other than the obligation to listen and to read. If you get the books, read the book. Book doesn't take that long to read. And if you're an ebook person, send to me at Anaj Enterprises Inc. at Gmail. You can get an ebook. It's a summary of the book. So it's not the full book, but at least it gets you started. You know, they say that old adage, if you want to hide something, put it in a book because we don't want to read. Well, here's the thing is that we need to take a little time and do that. So I say to you, definitely in this day and age is the time for us to become students of money, how money works. So today's topic is really about getting started. Tax season starts on Monday. I know a lot of y'all are going to go start heading towards trying to get your taxes done so you can get the refund, which you know my feeling about refunds. I don't understand it. Don't want to understand it. Why? Because that means you let the government hold your money all year long and then you wait to for them to give it back to you. Mm. When you could have increased or sat with your accountant or your financial advisor and calculated so you got more in your check all year long. And then you could go and do things with it. You could pay down bills or you could invest, and because that's your money. You worked for it and you should be able to take it and do something with it other than get it in a lump sum and then give it back to the stores, because that's what we do. You know, we give away our money instead of being conscious of how we make our money work for us. You know, I'm not going to be on this soapbox, but it's the thought. When I hear it, that I think, and I want to take credit for it, that commercial that was out there that said Larry's standing up on the table and he's got $10,000 refund. I want to slap him off that table. Thank God he's not. They're not showing it. At least I haven't seen it in a long, about 2 or 3 years. He would have had an extra $833 in his pocket. But what did he do? He waited until the government gave it back as a refund. And on top of it, they don't give you no interest for it. You didn't make nothing. It's bad enough we go to the bank and we give them our money and they give us 1%. You know, I'm going to do another show on that rule of 72 because they give it back to you and it takes about 72 years for your money to double. I don't know. As many times as I can, I'm going to keep saying it and talking because we need to stop this madness and we need to make our money worth something and make it grow. That being said, don't have slides today, just going to talk a little bit about how to prepare for what's coming up and what the new tax laws are about. Some things I know y'all have heard, there's some benefits here. So, that being said, under the One Big Beautiful Bill Act, which I call it the large lousy law, because it's not necessarily all that beautiful, but we're taking what we can get at this point. Some of the major changes, just to check here, is something called standard deduction. Now, do y'all understand what standard deduction means? It means you do not have to itemize. You do not have to collect receipts, and you still get to reduce your tax liability. It's a standard, okay? So for a single person, $15,750 is deducted from your income, and then you pay the taxes on the rest. So you might get a tax break. Couples, of course, is $31,500 is what your standard deduction means. Just fill out a short form and get your refund, or you wind up owing. But the key is if you owe, you need to know why you're owing. That's why it's important to talk to a financial educator or to an accountant or a tax preparer. They should be able to tell you why you're owing. If they're not, run, because that's the wrong person. And head of household. Oh Lord. On head of household, everybody thinks they're head of household. I pay the bills. So therefore I'm head of household. No, that's not IRS's idea. You have to have a home that you're taking care of and that you're taking care of a qualified individual. That can be a parent or it can be a child, but it has to be a qualified person. So everybody does not qualify for a head of household. I've gone through this a zillion times with folks, you know. There are some good things. There's a senior deduction that has come about. So, along with the standard deduction, there is for the taxpayers who are 65 years and older. So that means the baby boomers. There's over 76 million baby boomers out there. So a lot of them have started already turning 65 or have turned 65 and older. So this new law says that you get a deduction, an additional deduction of $6,000 to reduce your tax liability. So this goes on till 2028. So it's going to be around for a little while. And in doing so, it depends on how much income. Now, if you're really earning in the six figures, you might not qualify because the higher the income level, the lesser of the credit that the deduction you get. So don't just go and say, I have $6,000 I'm going to get written off of my income. That doesn't happen. Okay. There is something really good that's coming out of the big, beautiful bill. And that is some of the deductions that, well, some of the credits that are you're getting ready to be due. So there's a thing called qualified tip deduction. Now, I know you guys, especially in certain areas like taxi cabs, doormen, y'all don't necessarily report your tips, but you're supposed to. And it says it gives the employee or the self employed person, especially if you're an Uber driver here in New York, the deductions of the tips that they receive as qualified tipping occupations. Okay, what's that mean? That's what I just said. Is those people who are like your Uber drivers, your doormen, that the job would normally cause you to add on that income for the tips. And so that's one thing, most people do not deduct from their income the tips they get. So it sort of says that why should you have to pay taxes on it? So it can be reduced. These are like restaurants and food service places, hospitalities and hotels, bars and nightclubs, personal services like your salons, your nails, things like the spas, similar industries like that. That's what the tipping. So what happens is that there's usually a spot on your W-2 form or how you would keep your books to show whether or not you receive tips. You should know, and you normally would have to pay taxes on it. But no, you don't. You can pull it out. Now, if you're making $300,000-$400,000, don't look for the fact that all your tips are going to be removed. Not happening. The other thing is qualified overtime. That's really a good one because it should be on your pay stub, the end of the year pay stub of how much overtime did you do. Now that counts for full timers and part timers, just to let you know. And that too is a way to not have to pay taxes on the full amount of your overtime. So there's some breaks there, but that's the reason why you go to a tax preparer, an accountant, is that they can then discern whether or not you need to be paying taxes on this overtime compensation. Now, what was supposed to happen, and not necessarily were payrolls really able to correct itself because all of this stuff came out like July the 4th of last year of 2025. So they're getting it together. But what's supposed to happen is that it not even get to your income. It's supposed to be, so let's say you made $30,000 and of it the overtime was 8,000. That 8,000 should not be included in the taxable amount, but it would be on your tax papers. So this is a little bit confusing for us because I'm still checking to make sure whether or not New York State is is carrying through. Because usually when you file your income taxes on the federal, the state has different rules. And so that's why it's so important that you go to someone to help you. Or if you're doing the turbo thing or the electronic thing, make sure that you're getting the credits that you're supposed to. There's also going to be, for those of you who have decided to buy a car in 2025, the interest that you pay on the car loan, but it had to be purchased in 2025. But the interest on that car loan may be a deductible, and it doesn't matter whether you itemize or not. So it could help. And the objective of that was to, uh, people in this country, we need our car. I know I'm a New Yorker. I should use the train system. I'm sorry, I ain't getting on no train. Sorry, Mayor. I'll be glad to talk to you about it. But the bottom line is, until those trains get better, I done seen too much going on. I'm not getting on a train. But if you bought a car in 2025, there are some uh, deductions that you may be able to and eligible for. So, and that's not just because you have a business, because that's another whole different story. I'm just giving you the basic background. Going deep, we can talk. You can call me at 646-375-2121, and one of my associates or myself can assist you. Or you can send an email to Anaj Enterprise Inc. at gmail.com. I will constantly, I think, on this show, at least open up with one extra tax tip as we go through, because I think these things are important. Now, the big kahuna for New York is the sales tax, the state and local tax deduction. Originally, it was $10,000. Not helping at all. That means your real estate tax and your income tax, you can't deduct more than 10,000. Well, the big beautiful bill did allow us to have 40,000 as a deduction. That's a good thing, because I have my clients that are in Long Island. They pay a lot of tax. Upstate New York, a lot of tax. But they weren't eligible for the past 5 years to deduct it all. We only got a $10,000 deduction. So some wound up just being a regular standard deduction, as opposed to getting really some deductions on their income. We don't want to have to pay more tax than necessary. Now, married filing separate, you only get $20,000 deduction, because again, it's part, you're separate. But even though high earners, um, such as what I just said before, is that there's a limitation. So it may reduce how much you're able to deduct. But that's a good little tidbit. You think about it. When I read here for you the standards, so a couple who has real estate tax and income tax, instead of the standard deduction of 31,500, they're starting with 40,000 on their itemized. And if they have medical bills and contributions to church and charities, it might behoove them to itemize, but not till you get to a professional. Okay. Now, another good thing that came up, see, I can talk some good things too, is that the child tax credit, which used to be $2,000 for every child, now it's 2,200. Okay, let me get real with you again. If you're getting a tax credit, a child's tax credit, don't you think you should put some money away for that child? So if it's 2,200, okay, yeah, you got to feed the child, you got to clothe the child, stuff. So you want to use the credit, but think about it. How about taking $200 or $1,000, somewhere in between there, and put it away for the child's future? Not necessarily education. It could be just for the future. Setting up a child savings account and then teaching them how money works. Okay. So those are some of the credits. Of course, earned income credit, those things that, boost up when you have a low income. They're still in effect. They're not going away. It's just make sure that you have your proper documentations and that the dependent is really your dependent. Okay. Calling to account in the neighborhood. Don't sell your child's social security number. That's a no-no. People that say, well, I'm not claiming it. I'm no. If you're on public assistance, number one, you're not supposed to put that money out, that social security number out there. But number two is that if someone else is claiming that child, they're saying that they pay for over 51% of that child's livelihood. Okay, so they can get themselves in trouble with public assistance because public assistance is giving you money based on that they're going to take care of that child. Mm. If you sell it, the child's social security number, and someone else is claiming the child, well, then that person should be able to show that they take care of that child. Correct? Yes. So that means that when the child goes for their college FAFSA form, mm, could put a real good sticky wicket there. It could cause a lot of problems for that child because now you got three, four people who are needing to who are claiming the child. Oh, when is the exact date that tax season starts? It is January 26th. Thank you for the question. It's January 26th, Monday, this Monday. But if you don't have all of your documents, please do not. You can put them into if your preparer or your accountant has a portal, you can put it in the portal. But you don't expect the return to be done until everything has been added, taken in. So there are things that you call like 1099 interest, dividends. Now, some of this you can get online, but if you don't have it, your mortgage statement, all these statements need to be in one time because if not, and it's an error and you didn't get all, let's say you worked another job and you didn't wait for the W-2 form for that, hey, you filed the tax returns, then there's a thing called an amendment and it causes more trouble. Okay, is there a better time to actually file your tax returns? Any advantage to doing them at a certain time? Early is always good, but to make sure you have your documents. Whatever you had last year, make sure you have that. If you have some changes, like let's say, for example, I know last year it was really rough because the brokerage firms, the investment firms, had sort of a gratis move, and they were able to not send out your profits or your interest and dividend statements. And so, therefore, you couldn't do your returns until those statements are. Now, again, we're in an electronic world. You probably could have pulled it offline. But those 1099s were given like a little bit of a hiatus in sending them out or leaving them active for you. So then you file your returns. That's income. You need to make sure that that income is on your tax returns. And also, now I know I give kudos to Social Security. They sent their statements out. If you haven't gotten it, you need to go and check online and get your Social Security statement, or let them know you haven't received it. If you changed your address, make sure you've informed IRS and also the powers that be, such as Social Security and the banks. Okay. If a couple has been living together as married couple for a number of years, but not legal, can they get the same deductions as a legally married? No, they can't. Government government paperwork for government issues, government paperwork. So therefore, no, they cannot. Um, they need to be able to show. Now I'm going to say, there are people who have done it and said that they've lived together for 10, 15 years. That's really nice. Technically, IRS says that's fraud. It's just the way it is. It's just like with Social Security. If you've lived with someone as a married couple, but you have no documentation to prove it, and Social Security, you'd like to draw on that Social Security because you know after 10 years of marriage, you might be eligible for spousal benefit. But if you don't have that certificate, nope. Mm-mm. That even applies, and I checked it. It even applies for those because there are our brothers and sisters, and especially our Muslim brothers and sisters. They don't get the document, the license. If they don't get the license and don't have proof, they don't get the benefit. It's just the way it works, Unless I take that back 1 minute. If you are in a state that acknowledges common law, like Texas, I know there's a few others. I think it's Arizona. You can look them up online. States that acknowledge common law are the states that, yes, you can. You can get the same benefits and you haven't broken any law. But if you're in a state like New York, New Jersey, nope, not allowed. Okay. Thanks for the questions. Okay. Can you write our pets off for our taxes? That's a great question. Okay. Depends on the pet. If they are service pets, there's another top type of pet that they are emotional service pets, travel pets, things like that. Yeah, you can honestly to especially if they're designated, they have to be designated as such. But yes, there's like their food, their medical bills and things. They're just like if they were not a dependent, but that they are they're part of your livelihood, your sustaining livelihood. Some of them, especially the service pets, they're working. I mean, I had a client of mine who had a Cocker Spaniel. Did I know that Cocker Spaniels, especially for these seniors, are like a whole lifesaver? No, I didn't know that. But the thing is that that's a true thing. And so the client was able to sustain the dog because the dog would come to the senior citizens home, and that was part and part the dog's work. So good questions, definitely. Okay, another thing that's coming up is the 1099K. There is now a threshold for you to receive one. So this is if you have a gig, an outside job, or you're receiving money from the Squares and the Zells and the Cash Apps and the Venmo, all of those things. If it reaches 20,000 and there is at least 200 transactions, you are mandated to receive a 1099K. Now, you got to realize what you do with that. What did it cost you to make that money? Those things may be deductible. But now, independent contractors, gig works, reach that threshold, you're going to get the 1099. Now, what you have to be careful, and I'm going to put you on warning for this, is if you give a family member $20,000 and you sent it through Zelle or whatever, or Zoom multiples, you may get a 1099K. You need to have proof that these were gifts and not from doing business. Be very careful because we do this with our business accounts. Sometimes we give family members money. Please be very careful when you do that. Can we write off our trips and vacations if it's business related? Um, it has to be something that's proven that it's for business. So, for example, if you take a trip, you the best thing to do is to have correspondence to show that you're doing. So, for example, I'll give you an example. I had a client, he went to Japan, he was a banker, and out of the 7 days, one of the days he went to the banks and had to see how Japan deals with the banking system. And it was to help improve his work at his company, his bank here in the United States. That's a business. But he had to be able to prove to IRS that this was for business, not just vacation. So out of the 7 days, 1/7 of his expenses were deductible. Okay, so it depends. This is why you sit with a financial advisor. Now, there's some trips that we take that are totally business. We don't do anything. Like I'm getting ready to go to a major conference for Wealth Wave because they're getting ready to do an immense project on and crusade on financial literacy. I am there for 5 days. I'm not having any fun, but in addition to it, I do have dinners that I'm going to, and those people who are providing our dinners can write off the dinner. But it's a thin line. So it's important that you sit at least one time. If you think you can do your own tax returns, then at least sit one time with a CPA, an accountant, a certified tax preparer, somebody who knows what they're doing, so that you can get the right things that are written off. Records, records, records. Okay, I'm going to throw it out there again. Records. You've got to keep a record of what you're thinking that in receipts. Now, sometimes I know the receipts are a little bit of a challenge because we done gotten into the age of technology, and they give us these little film type receipts. It's okay, scan them and put them in your records. You can scan them, they will accept it. If you're having dinner with people for business, you need to write out, first of all, on the back of the receipt, write out what you met about. Few words. Who was present? And you're not, what was the major outcome of the meeting? Is it that another meeting's coming? Whatever. Is it planning meeting? Was it a work meeting? You got to just in case you ever get audited. Yeah, I said the word audit. Um, you want to make sure you have proper records of what you're doing. We don't keep diaries and journals anymore. At least some of us don't. I do. And in those diaries and journals, you need to say what you're doing. Show that you're in business, especially if you're sole proprietorship type business. You need to know when you're in business and when you're not. You're not in business 24 hours, 7 days a week. Well, at least some of us. I have a tendency, I'm thinking about creating the workaholic, uh, 12-step program, because workaholics are dangerous. We work a lot of hours. But the key is that you got to keep records. When in doubt, get the record, get the receipt. You know, these are the things that we have to look out on. But on all income, I'm reading from IRS, is that side gigs, marketplace sales, gig work is taxable and must be reported. So you don't want to be in that position that you're not reporting, because if you get caught there, there's another fine for that called under withholding, understating income. You don't want to fall that in. Okay. So another thing is, if you want, for the purposes of uh, your the benefits that are coming through that I mentioned before, if that's the case, then what you want to do is you might want to change your withholdings on your job. Now, this is where you really want a tax professional if you can, but if you want to figure it out, there is a site on irs.gov that you could try to figure out what your withholdings are. But it's on your W 4 form. There's a W 4, and it's how much you're withholding. If you're withholding too much, That means you're going to get a refund at the end of the year. That means that you're giving the government money and they're going to give it back to you with no interest. You can figure it out. It's one of those things, like I said about Larry jumping on the table, dancing, about a $10,000 refund. Could changed his withholdings so that he could get that $8,033 in his $833 in his paycheck and do something with it. Positive. Okay. So it's important, like I said, is that the tax season's supposed to start, as someone asked, January 26th, which is Monday. Do not start if you don't know you have all your information. Very important. If you just get a W 2 form, then fine, you know. But this is planning ahead. So just to recap, we have larger standard deductions so that you don't have to itemize. But if you give to charity, you have medical bills, especially now for 2026. I don't know, with the way they have not changed where they're going to supplement this health insurance. So you're paying health insurance, you're paying medical bills, you're paying dental bills, okay. If it comes over 7.5% of your adjusted gross income, that's part of your deduction. There's the salt, the higher salt deduction limit, which was originally 10,000. Now you have 40,000 if you're a couple. There's some that's a positive for you to be able to deduct. Increase on the child tax credit. You remember what I said there? Sit with a financial educator and possibly put some money away for that child. Do you know that if you put $200 away for the child per year? Okay, it's not going to be a lot of money, but every year that money could grow. And by the time the child is retired, they could have a little bit of something, $30,000, $40,000 if it's put together properly. But if you need some advice, as it says on the screen, is that you'd like a financial analysis, 646-375-2121. And the reason why I repeat the numbers, because I know my family at WHCR 90.3 FM, they don't get to see the screen. So I'm just giving some little heads up so that they can hear it. Okay. So these are the things that are important right now when you're dealing with preparing for your taxes and looking forward to a good tax year. We just have to make sure that we document, document, document. The laws are going to be on the books probably until 2028. So therefore, the more that we plan, the better, you know. And these are some decent things, especially those of you who have tips and those of you who work overtime. Now, if for this 2025, let me make this note, for 2025's tax returns, your job may not be able to discern your overtime. The best thing you can do is when you file your tax returns this year is to make sure you have your last pay stub and see if it shows where, because they usually do show you where you had overtime. So the key is that if that's the case, then you need to be able to show that to your preparer or be able to enter it into whatever software you're using. But it's so important that you be able to identify because that's what you're going to pay less tax on. Follow me? Also, okay, how can one who is interested in the financial industry do to work in the financial service industry? I'm assuming. If they're really interested, they need to give me a call. I would give them guidance. So they could call 646-375-2121. 646-375-2121. And I tell you the reason, did I say that right? 646-375. Yeah. And so the important part behind it is I am looking to mentor some individuals that want to come into the financial service industry. Just to give a little ploy there, the financial service industry is larger than the retail and the real estate industry combined times two. It is a large industry. The people of color need to realize that it is an industry that they need to be in, but not necessarily as a job. I know I'm going to get my little slap for this, but when you work for yourself, you control your destiny instead of having a salary, which sounds a lot like slavery, because no one can pay you for what you're really worth. But the freedom that you have when you work for yourself is powerful. So I'm glad that that question was asked because it's very important. Yes, if people are interested in getting into the world of taxes, are in the world of financial planning or becoming a financial educator, and especially I want to talk to my teachers out there. You definitely don't get paid enough money for what you put up with. Wouldn't it be great to be a financial educator and get paid? Just a thought. It's something that is out there for you to expand. And since you already know how to teach, it may be something that you'd like to do. Or some of the people who are retired. You know, I've had folks ask me a many a times, when you going to retire? Okay, I'm not tired, so I can't retire. Okay, I love what I do. When you love what you do, and that's in anything, we're put here on this earth to do certain things. We have certain talents, and if we don't use them, then we've got a graveyard full of people who had wonderful ideas and did nothing with it. So I would say is the best thing to do is to reach out to me. Maybe I can help you and give you some guidance on what you're doing and how to take that golden idea that you have and turn it into something that is profitable for you. Oh, thank you. Thank you for noticing. Yes. Teaching financial literacy is my heart and my soul, and I enjoy it. My years on Wall Street gave me the exposure and the knowledge. And I say and challenge any financial advisor that's out here and any accountant that is out here, a tax preparer, that they need to reach out and help our community and not bamboozle them. Okay, you can get paid well without trying to take people's the end of the world money. You can help them. Yes, so definitely. But yeah, if someone's interested, please reach out. You can send me an email at anajenterprisesinc@gmail.com. Or if you're really, really, really interested, you can go to my website that is totally on financial literacy, which is wealthwave.com /Jana B. Wealthwave, WEALTHWAVE.com Jana, JANAB. There you can learn about how to become a financial educator, uh, 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 and anything else that you want to really do in the world of finance to help people. So bringing financial literacy to your community, teaching it, learning how to, if you want to learn how to maybe get into the financial service industry, I see on Facebook continuously where they're looking for people who have their series 663, their 7, their 65. These are all FINRA designations. These are designations that allows you to talk about money to people. But some people just don't know where to go, or they feel that they don't know about money enough. Well, we do have some programs that you can learn from. So if you reach out to me, I'll be glad to tell you what we have available for you. and what you can do to get started if you're really interested. I'm so glad that that question was asked because I forget sometimes. I would love to pick 12 individuals, and I think it worked for Jesus, it might work for me, to mentor and to see if we can really bring financial literacy as a whole to this New York area and across the country. There's over 66% individuals in this country who do not understand basic compound interest. They don't understand how to balance their checkbooks because we don't have a checkbook anymore. Most people, some of the basics that we used to have, we get involved in all of these subscriptions and we don't know how to get rid of them. All these things. I keep talking about Access Wealth Nation is what we talk about because this is so important to know and to get ourselves out of the messes we get ourselves in. A lot of people are looking right now. You see the market is going upward. It's up. It's at an all-time high. I remember when I started in this industry back in 1984, the Dow was a whopping 1,800. It is now almost 50,000. But how many of us are involved in that? How many of us even understand how it works? And how many of us want to? If you have the desire, then you'll attend the classes that we're going to start in February. It's going to be on Wednesdays at 7 p.m. And I will be putting out the link. And you get the opportunity to listen for 30 minutes. It's only 30 minutes. You can listen in your PJs. Okay. And get an opportunity to understand. And yes, we'll have a Q&A period, which would be probably about 5-10 minutes at the most, because people are on the move. I just want to answer and to help, just like what we did here. I really appreciate those of you who asked questions today. I appreciate it. Tell more people that we're here and that we're here to help. There's also some of my other counterparts are on the Soul City Network. Listen to their shows talking about what's going on in our community. Tyrone Glover talking about his mission on bringing financial literacy also. We have Iridita Andrews. She is out there. Anderson, I don't know why I said Andrews. She's out there telling people, young people, about how money works and how they can get involved with building on a financial literacy. So Soul City is really bringing the soul, because it's not just all the fun and games that are going on in the community. They're bringing about some real heavy information about how we can build our community and not be a part of some of the madness that's going on out here in this country. So it's been really great. I know my time has now come to an end. I really appreciate all of you. And again, we have Access Wealth Nation with Dr. Jana B. Woodhouse giving you that checkup from the neck up every Thursday at 6 p.m. Tune in and then tune up and get busy making a change. Have a good night.
She was told that she couldn't play with the boys. She was told that they were too big, too rough, too strong. She was told to give up her dreams and move on. She was told to just be pretty, be quiet, be a lady. She was told that women had to stay on their side of the court, stay in your lane. Playing and competing with men was insane. She was told that men and women would never be equal. Dreaming like that would only be linked to your mind, to your soul. She never listened. She knew that their thinking was old. She is magic. She is the definition of spirit. She is what champions are made of. She is now.